The CommBank Household Spending Insights is out for May. Now, Belinda, we're seeing the first signs of the interest rate hikes really taking hold on households. What does the spending data show us?
So we did see a lift of just 0.2% in May. It's been pretty choppy the last few months. But if we look at the pace of annual growth, so house spending in May 2026 compares to May 2025, we are seeing a slowdown. Annual growth's just now at 4.5%, and that's certainly slower than what we saw, particularly over the second half of 2025 and at the start of 2026, before those interest rate hikes and before inflation really started to re-accelerate in the Australian economy. Probably the easiest way we're seeing the interest rate hikes impact on spend is when we look at spending by home ownership status. Those with a mortgage are slowing the most now.
What's going to happen for the rest of the year? Is the RBA done hiking interest rates?
So we did see the RBA in June leave the interest rate on hold, and that was the first on hold decision in 2026. We do think interest rates are on hold from here for the rest of this year, unless inflation proves more persistent than what currently we and the RBA are expecting. So we do expect no more rate hikes this year.
Falling house prices are emerging as a new pressure on households. What's driving that trend?
There's quite a few factors feeding into softer home prices at the moment. The first reason, of course, is interest rate hikes. It's one of the major drivers of movements in home prices in Australia. Those 3 interest rate hikes have certainly dampened sentiment in the housing market, dampened turnover. Second is housing affordability constraints. So that's been a feature of the Australian housing market for years now. That's certainly weighing on demand for housing. The third factor, of course, is the changes in housing tax policy that were announced in the federal budget. The fourth factor is sentiment. So we've talked about rate hikes, we've talked about affordability constraints, budget, housing tax policy changes. That's all impacted on sentiment, and certainly we're seeing a shift lower in home prices, particularly in Sydney and Melbourne. Less so in the mid-sized capitals like Adelaide, Brisbane and Perth. They're slowing, but still rising.
How have petrol prices and the conflict in the Middle East and the uncertainty around it affected households?
So sentiment's low. So we have seen primarily a real impact on consumer sentiment being in pessimistic territories. A lot of uncertainty, a lot of headlines, as well as we've also had interest rate hikes as well. It's really interesting though, when you look at our spending data here at CBA, if we look at the share of wallet and what households are currently spending at petrol stations, it's actually the same amount as what it was at the start of the war, so even pre-war. So where we're seeing the impact from the Middle East come through households is that sentiment channel, and it's really the higher inflation environment that was here in Australia ahead of the conflict that's actually impacting spending the most at the moment.
Now, one interesting point is that there was less spending on Sundays in May, so it really is the day of rest in Australia. Can you tell us more about that?
It's actually a really interesting detail we picked out in this report. So May had 5 Sundays. Now, why this is important is we actually spend less on Sundays than any other day. So the fact that we had more Sundays than normal actually drags spending across the whole of May lower than what it otherwise would have been.
Oh, okay, that is a nice, interesting fact. Well, thank you so much for your insights, Belinda.
Thanks.